Hey everyone, welcome in everybody. We're diving into something that I bet you've thought about if you've ever, even looked at the stock market. Can it actually be better than us humans when it comes to investing? I mean, you've probably seen like a million ads for these AI stock picking things, right? Promising like crazy returns. But are they for real? We're going to look at some new research to see what's up. There's a super interesting article from Morningstar that really digs into the numbers, so let's get into it. Get ready for some surprises, folks, because we're going to figure out if your financial future is about to be decided by like lines of code. So this Morningstar article, right, it's called Can AI Predict Future Stock Returns? Catchy, right? But the researchers, Cao, Zhang, Wang, and Yang, they did something really cool. They built an AI, like a whole model, and then they made it go head-to-head with real human analysts to see who could predict how stocks would do. Like a Wall Street showdown AI versus the humans. And guess what? The AI, it actually did better than a bunch of those human analysts. We're not talking about like a tiny win here. This AI, it had better predictions than over 54.5%, more than half of the expert humans. Imagine like a computer program just consistently beating out most of Wall Street's best. It kind of makes you think, huh,
And you know what's wild? It's not just that the AI won, it's why it seems to be so good. The study, it points out a couple of things. First, AI, it can handle tons of data, like way more than we can, and it does it crazy fast. But here's the real kicker. AI doesn't have emotions, or biases that mess us up. It just looks at the numbers, no feelings involved, which, let's be real, can be a huge advantage in the crazy world of finance.
there's
Yeah.
like your ideal investing buddy who never freaks out when the market takes a dive.
Exactly. A totally calm, cool, and collected approach. But before we all run out and hand our portfolios over to the robots, hold on. This study isn't saying human analysts are useless. There are definitely nuances, right?
Right. It's not like humans are going extinct or anything.
Exactly. See, the research, it also found that the AI was really dominant when the information was crystal clear. Even if it was a ton of data, if it was straightforward, the AI ate it up. But when things got more, fuzzy, like when you needed some intuition, that's when the human analysts, they really showed their worth. Like, think about companies with a lot of what we call intangible assets. Humans were better at figuring those out.
Okay, hold up a sec. For those of us who don't speak fluent finance, what exactly are intangible assets? It sounds kind of, well, intangible.
It's a bit of a vague term, you're right. Basically, intangible assets are things that have value, but they're not physical things.
Hmm.
So not like gold bars or factories, more like a company's brand, right? How recognizable they are, their patents, the stuff they've invented, or even how good their leadership team is. Those are all intangible. They can make or break a company, but you can't really touch them or measure them easily.
Ah, okay, that makes sense. So it's like trying to put a price tag on a company's reputation or their secret formula. It's not easy.
Hmm.
And that's where human analysts have still got it going on, right?
Exactly. When it's about evaluating those less concrete parts of a business, the human analysts, they were often more on point with their predictions than the AI. They even did better than the AI in some cases.
Yeah, I remember that from the Morningstar article. They talked about how human analysts were better at figuring out returns for smaller companies, the ones that aren't traded as much. It's like they could sense something the AI missed, like a
Mhm.
sixth sense for stocks or something.
It is fascinating, isn't it? You see, those smaller companies, they usually don't have mountains of data just floating around for the AI to gobble up. So the AI, it has less to work with. And that's where human experience, that gut feeling it, becomes even more valuable. Humans can connect the dots that the AI might not even see because there's no dots.
So it's not just about crunching the numbers. It's about understanding the story behind them. Like, what's the company really about? What's their big vision for the future? Those aren't things you'll find on a spreadsheet. It's almost like we're talking about stock picking as an art form. I thought for sure by now, like, robots would be doing all that.
And yet, here we are, still relying on those gut feelings. And get this, the Morningstar study, they didn't just make the AI and the humans compete, they actually teamed them up. And guess what happened? When they combined the AI's power with the insights from those human analysts, well, that combo, it totally crushed it. Way better than either one could do alone.
Like having a superpowered sidekick to handle all the number crunching while you plot the strategy.
Precisely. It's not about AI versus humans. It's about figuring out how to get the best of both worlds.
Which kind of leads us to the big question I bet everyone's wondering. What about those AI-powered funds we keep hearing so much about? Are they really all they're cracked up to be? There's this other study, it's by Chen and Ren, and it's called Do AI-Powered Mutual Funds Perform Better? They're tackling the big question head on. So what they find out? Are these AI funds making investors rich?
Well, get this. The results, they might surprise you. Turns out these AI funds, they didn't actually do that much better than the overall market.
Wait, slow down. All this talk about AI being the future of finance, and these AI funds aren't exactly setting the world on fire, that's kind of a letdown.
Yeah, it's not quite the robot revolution we might have pictured. But, and there's always a but with these things, the study, it did show something interesting. Those AI funds, they actually did better than the funds run by us humans.
Okay, so maybe not instant riches, but still, beating out the humans is something.
Right.
What's the secret sauce?
The reason's kind of cool, actually. It seems like a lot of the AI fund's edge, it came down to having lower costs. And why lower costs? They were trading less often. Think about it. Every time you buy or sell, it costs you. The AI funds, they weren't making as many moves, so they weren't losing as much to fees.
Yeah, those fees can really eat into your profits over time, that's for sure. But I'm curious, thinking back to that first study we talked about, could this whole not trading as much thing actually be a weakness in disguise? Like, are these AI funds playing it too safe? What happens when the market takes a sudden turn, you know?
Now that is the million-dollar question. It really makes you think about where AI is at in the world of finance, right? Are these algorithms being too cautious, too focused on the long game that they miss out when things get volatile in the short term? Or maybe it's just early days, and as these AI systems get smarter, they'll figure out how to be both steady and adaptable.
It's that classic investing dilemma, right? You want to ride the waves, but you also got to know when to change course. This whole AI evolution, it's a lot to wrap your head around. So for the average investor who's trying to keep up, what should we be prepared for? What's coming down the pipeline? So, like, paint us a picture. How do you see this whole human AI team up working for regular investors like me in the future?
Well, think about it this way. As AI gets better, like scarily good, at spotting those little market quirks, those inefficiencies, the market overall, it might become more efficient, you know? Which sounds kind of good, right? But here's the thing that might actually make it harder for us regular folks to find those, like hidden gem investments, the ones that can really blow up your portfolio.
So no more picking the next apple because of a gut feeling and a dream.
It might be tougher, yeah, at least in those like well-established parts of the market. But hey, there's always a bright side. More efficient markets, they could mean more stability, fewer of those wild swings from, people panicking or getting a little too excited. And that's good for everyone, right?
Right, right. Maybe a little less like gambling, a little more predictable. Sounds like the name of the game is going to be like adaptation.
Right.
Right. Investors who can roll with these changes, learn how to use the AI tools, but also still bring their own human smarts to the table.
Yeah.
Those are the links you're going to win.
100%. And remember, the world of finance, it never sits still. This whole AI thing, we're just getting started. Buckle up. It's going to be wild.
Wild is right. This has been a seriously mind-blowing look at AI and finance. But before we wrap things up, I want to leave you with one last thought, something to chew on as you navigate this whole new world of investing. We talked a lot about AI, right? How it sees patterns, crunches numbers, maybe even predicts the market. But what about those things nobody sees coming? The black swan events. Stuff like, the 2008 crash, the pandemic, even surprise political stuff. That throws everything out of whack, even the smartest algorithms.
That's the thing about AI, isn't it? It's only as good as the data we feed it. And history, well, it's a good guide, but it doesn't always play by the rules.
Exactly. So yeah, these AI tools, they can be powerful allies in the market, but we got to stay sharp, Keep our eyes open, read the news, and most importantly, trust that gut feeling when something feels off. Don't just blindly follow the robots, right? Keep asking questions, keep learning, and keep that human intuition sharp. Thanks for joining us for this deep dive, everyone. Until next time, stay curious out there.